Good afternoon. Today is Monday. The date is September the 4th. Right now, the time in Singapore is 12:31 in the afternoon. Now, today is a US holiday as the American celebrates the US Labor Day holidays. So the market is likely to be quiet on the back on the fact that there is no major economic release for today. And before the market went into the weekend, we can see the US equity market has basically rebounded. In the Dow Jones Micro E-mini futures, you can see the high traded was 35,167 from the bottom of 34,062. And this rise has hit a pocket of resistance within the 35,049 to 35,317. And right now, what we are seeing here is a classical pullback, and if this pullback extends a bit lower, there's a good possibility it may find some kind of support around 34,484 to 34,515 before the market gives us a new direction. So in the meantime, the market is likely to pull back a little bit further. This is based on the overall bearish outlook since the market top up at 35,844 that we saw in July. So we can see that the market basically has a lot more room to the downside, and so I'm taking a slightly bearish outlook as far as US equity is concerned. In the S&P 500, we can see the rebound has been a lot more robust. After all, the market has done a three-wave rally from the bottom at 4,350 even all the way to the high of 4,547 and three-quarter on Friday, which hit a pocket of resistance between 4,532 and three-quarter to 4,560 and three-quarter. So right now, there is the possibility market may actually ease back in tandem with the Dow Jones. And if that's the case, there is possibly some kind of support, or at least a technical support at 4,435 even to 4,456.5. So this is an area of potential demand here, purely based on a 50% pullback. And in the Nasdaq 100, now basis the micro E-mini Nasdaq 100 futures, we can see the market also have a three-wave rally into 15,661 and a quarter, which is within a bracket of prices that actually caused the market to actually stop in its track. That level is 15,440 and a quarter to 15,560 and 0.5. So we can see this pullback again, very likely to pull back at least 50% to go to the 15,027 to as low as 15,100 levels. So again, bias is to the downside, at least for now, okay? And over in Asia, we can see that in Asia, prices became very robust because over the weekend, we can see on Friday, especially last Friday, the Chinese manufacturing PMI, as far as the Caixin, which is a private number that comes out different from the one that come out from the official source, shows that Chinese manufacturing purchasing managers index has popped back up above the growth area of 51. Now remember, anything below 50 is a contraction zone, anything above 50 is a growth zone. So if that number is to be believed, we can see that demand is slowly coming back in Chinese equity markets. The high traded this morning is just under 19,000 to a high of 18,896, and let's see if market can continue a little bit higher. But technically, we should have some kind of resistance between 19,429 to 19,517. So let's see if the market, how it reacts around here. Okay, do watch out for further extension into the mid 1900 levels. And in the Nikkei 225, Nikkei has already punched beyond the previous swing high of 32,810 to a high this morning at 32,920. Let's see whether the market can stay above or close above this level. And if it cannot, then come back down again below 32,800, it could be a false move. So do watch out for that, because so far the bounce is a three-wave affair, meaning to say it is largely corrective in nature. So this move here could potentially be a fake move. So do watch out for how it closes this afternoon. Okay. And in the dollar itself, the dollar index has continued to edge higher. This is on the result of basically the slightly better manufacturing PMI that we saw on Friday. Now, last Friday, we saw the release of US job numbers, and the number has shown us that US labor market is slowly slowing down. We did not see any increase in wages in terms of the average hourly earnings. It has basically dipped, and unemployment rate has climbed to 3.8% from 3.5% or 3.7. I can't remember the exact number, but basically it was a number that suggests that U.S. Employment situation is slowly easing from a very tight situation, and that means the Federal Reserve is highly unlikely to hike interest rates. So we can see the market did not move until the manufacturing PMI was released. A couple of hours after the release of the non-farm payroll, they kicked the dollar up to 104.25. So this basically keeps the dollar very well bid. And if the market do see a pullback, buying area could be a 103.60 to 103.70 level. So look out for any kind of buying opportunity. The market may actually challenge the last June high. Sorry, the June high, not the last June high. The June high of 104.62. That is possibly a target for the market to go for towards the 105.50 to 105.90 level. So this is an immediate target. So from where we are right now, there is still a good 100 odd points more to go for the dollar index before it finished its entire rally from 99.22. Okay, and in the currency pair, we can see the euro dollar has actually gone down on the back of a strong resurging dollar. And if we do see some kind of a extended decline, which is quite possible, but I think there is a possibility the market may bounce a little bit later on in the afternoon when the European traders comes in. And if that's the case, look out for opportunity to look to sell at 108.15 to 108.27, or rather 30 levels, for a final drop to 106 to 107 levels. So at least from here, there's 100 pip more to go before the market finishes its entire sequence of downtrend. Okay, and sterling is the same thing. Sterling also saw a very severe drop on Friday, and if we do get a bit of a bounce later on in the afternoon, the area of opportunity could lie at 126.30 to 126.45 before the market edge lower, complete its entire move here. I have a target here at somewhere around 123 levels at the minimum. So do watch out for another drop here, which is quite severe, because from where we are right now, the market managed to go to 126. We are potentially looking at a 300 pips move to the downside. Over in the Aussie, it is also quite similar. Aussie has a rebound, a three-wave rebound to 0.65, and then it got stuck here within this bracket of prices between 0.65 to 0.65. 30 levels, and we can see the market is struggling right now. And this morning we see a bit of a bounce into this bracket of prices between 0.6470 to 0.6480, and if we cannot continue higher, it's likely to come back down to take out this low here that we saw on August 23rd, which is at 0.6365 levels. So there is a possibility we may see an extended move to the downside, possibly to target October low, last October low, within this area of 0.60 to 0.62 even. Okay, dollar yen is obviously trying to go higher. We have finished a three-way pullback very neatly to 144.44, and this is an area of bracket of prices which, if you have followed me last week, I would have mentioned this level at 144.40 to 144.85 levels could see some kind of support, and the market did find support at 144.45, and we have a bit of quite a bit of a rally on Friday before the market closes. And if we do see a bit of a pullback, the area 145.40 to 145.60 level could offer some kind of buying opportunity. The target remains at 148 thereabout, basically a move to take out the 147.37 levels. So do not try to buy above this level, because this level here represents some kind of potential vulnerability here. Okay, and dollar Canadian also have the same sentiment to the upside. We saw the move back up from 134.90 to 136.13 on Friday. If we do see a bit of a pullback later on in the day at 135.50 to 135.65, that could be a buying opportunity for a move beyond the April high of 136.70 levels. I think this is, at least for now, the target to aim for. Okay, and crude oil. Crude oil has traded to a high this morning at $96.09, and this is the highest we have seen crude oil this entire year. And if we do see a bit of a pullback, well, I won't say a bit, it's going to be quite a sizable pullback. If we do see a sizable pullback, at least to the what you call that, the 50% mark, I think that level will be about $81.84 to $82.84. That will be a good area to pick up some longs, because these fundamentals behind crude oil rally has been the belief that Saudi Arabia may extend its production cut another month to the end of October, of which I think the market has already absorbed the news that Russia will follow through. And both Saudi Arabia and Russia has been at the forefront to cut production on their own, beside the production cut agreed among the OPEC members. So this is causing a supply shortage. And of course, we know that last week we have a hurricane that hit off the Florida Bay, and a lot of offshore rigs were actually shut down, and that also contribute to the supply concern. And on top of that, last week we remember early on I did mention that the Chinese Caixin purchasing managers report for manufacturing has actually popped back up above 50 to 51. That also shows a surprise rebound in Chinese manufacturing. So that should also underpin demand for energy prices. So if that's the case, overall, we should see higher prices in energy prices going forward. I have a target here about $92. Let's see what the market can do if and when the market goes there. And if the market take out the October low, which is last October low at $94.64, that could actually cause prices to even escalate towards the to the $100 per barrel range. Okay, and of course we have precious metals. Now precious metals has also gone up. This is a little bit unique because typically when the dollar is strengthened, the precious metal do decline. But right now we see both the dollar and precious metals both moving higher in tandem, and we see a high last Friday at 1,952.95 cents, and a bit of pullback is actually healthy. And if we do get a pullback to somewhere around 1,923 to 1,927.5, I think that could be a good area to pick up some more long position. There is a target here of 1,966.40 cents, at least for now. Okay, silver is the same thing. Silver has pulled back a little bit more aggressively than gold, and a high traded on Friday was $25.01. And you see that there's already a very visible three-wave pullback. I was hoping that the market can actually test the $24.03, but this is as good as it comes. Possibly the market has already finished its pullback. The low so far this morning at $24.10 could be the low for this move, because there is a very, very minor reversal pattern here. So this could also be the reason why the market, I believe, has already bottomed and is getting ready to resume its rally above $25.01. Okay, over in Bitcoin, we see the market has gone flat basically after the market sold off from 28,180 all the way to below the 25,466 that we saw on August 23rd. So on Friday, we see the market slammed down all the way to 25,451.70. So of course, the exact pricing will not be the same for various exchanges, but by and large, you can see the market actually take out the previous low on August 23rd marginally before the market bounced back up. Now this could potentially be a fake move, but for now the recovery has been very tentative. No saying that it will continue to go higher, but again, this could be an area of opportunity here. So watch out for this move. I have no view currently for Bitcoin, because after this reversal in prices, it does changes the sentiment somewhat. Okay, let's watch out for further move. And of course, a lot depends on the SEC right now, whether they're going to approve the application for various houses trying to get a spot BTC EFT license. Okay, there are numerous companies applying for such a license because they say that institutional players are interested in such an ETF. So let's see what happens going forward. In the meantime, that's all I have for you. I'll come back to you tomorrow with another update. Now, do remember tonight there's no US market, as the market is closed for the United States for the Labor Day holiday. All right. Thank you very much. I'll see you tomorrow morning. Bye-bye.